Good.
Manner. So these are my opening remarks. Then we will do a quick presentation, and then I will take the questions. Yeah. So I have to read? Okay. So profit after tax, already it has been all flashed on your screens. So when you look at the net interest income, YOY minus 5.18%, but it has to be understood that there was a steep decline, of course, in MCLR. And the other is that lot of NPAs were recognized, and when NPA gets recognized and some NPAs are getting recognized from the back date, straight away moving into D1 or D2, then it results into the interest income reversal. And that's why the net interest income is showing a YOY decline as far as the quarter is concerned. Non-interest income, the growth has to be viewed in the perspective that treasuries income is not that high as it used to be. Operating expenses are very well under control, and this is despite the fact that there have been some enhanced provision on account of the wage revision, and as well as the gratuity, which the amendment came in the last week of March. Loan loss provision, as I said, that we have consciously increased, and the provision coverage ratios I've already mentioned that they are significantly higher, and this gives the strength to the balance sheet. In the quarter, the mark-to-market loss was 2,594 crore. And let me mention here itself that the RBI gave a dispensation that the mark-to-market losses can be spread over 4 quarters, but bank has decided not to avail of that benefit because the trend in this quarter also, as far as the yields are concerned, is upward. So bank has consciously decided that we will not avail of that mark-to-market benefit, and this is the resultant number, 7,718 crore. So for the year, again, net interest income I have already mentioned that it has to be viewed in the context of the reversals of income on account of NPA recognition, and as well as that the decline in MCL was steeper than the deposit. So I would consider it to be a very satisfactory performance as far as net interest income is concerned. Non-interest income, again, if you look at fee income is up by 10.5%, and recovery in return of account is up by 34.50%. Operating expenses, very well under control. Operating profit in the given circumstances, whatever I have explained, so almost flat. It is the loan loss provision which are up by 27.53%, and 70,000 crore loan loss provision, and still you emerge as stronger. So that is the strength of State Bank of India. That is what has to be recognized. Mark to market, I had said that 6,000 crore for both the quarters. We had the option of taking the loss in 4 quarters, but we have decided not to take it, and this is what the consequent number, profit after tax. So this is very important that despite so much loan loss provision, but bank's capital position continues to be fairly strong. That is a result of the QIP, 81 bonds raised, and divestment in SBI Life and Government of India infusion. But on the top of it, one of the most significant thing is decline in the credit risk weighted assets by almost 780 basis points. So this is the gross NPA position, 10.9%. Net NPA is 5.73. Gross NPA watchlist I will come later on. Slippage ratio is lower than the last year. Credit cost is higher because more provisions have been made. But the point to be noted